Hello, friends. A warm welcome to you on the Listen to Learn channel. First of all, a heartfelt thank you for subscribing and supporting us. This channel isn't just an ordinary YouTube channel, it's a mission. It aims to sharpen your mindset, shift your thinking towards abundance, and guide you on the path to financial freedom. So, if you genuinely want to learn something life changing, if you're serious about securing your financial future, then listen to this book summary all the way through. Imagine having a clear and precise guide in your hands that shows you exactly how to protect and grow your money without getting caught up in the daily market noise and headlines. The book, The Investment Answer, simplifies for us in just 5 simple steps how to make the most important investment decisions, how to build the right portfolio, and how to ensure your money works for you over the long term. If you want your money to work for you instead of constantly chasing after it, then this video is just for you. The fear and confusion in investment. That's the chapter 1. Getting started in investing can feel intimidating and often challenging. Everyone hopes their money will grow in the right way and that their future will be secure. But when it comes to investing, most of us fall into confusion. Daniel C. Goldie and Gordon Murray, in their book The Investment Answer, stresses that the very first and the most important decision any investor must make is whether they will invest independently or seek help from a professional advisor. This single choice forms the foundation of an investor's entire journey. If you are new to investing, it's crucial to understand that proper guidance is extremely important both for protecting your money and for helping it grow. According to Goldie and Murray, new investors are often overwhelmed by complexities of the market, the many options available, and the constantly changing trends. Investing without proper guidance significantly increases the risk of making costly mistakes. An independent, fee based financial advisor works solely in your best interest. Their goal isn't to sell you specific products, but to help you make the right choices to meet your goals. Goldie and Murray emphasize that getting professional help gives your investment journey a strong start. They help you understand where and how to invest your money to minimize risk while securing long term returns. Chapter 2, The Pressure of Going Solo. When you decide to invest on your own, doubt can easily creep in. Market ups and downs, the complexity of the choices, and the constant pressure to make the right decision at the right time can create stress and uncertainty. Goldie and Murray clarify that for a new investor, this stress can lead to financial losses. On the other hand, with professional guidance, much of the pressure is eased. Advisors not only help you pick the right options but also guide you in reviewing and rebalancing your portfolio regularly. This ongoing support can be crucial for long term success. With the expert advice, your decisions are no longer based solely on guesswork. Instead, they are rooted in professional knowledge and years of market experience. Without such guidance, investors tend to panic during market dip or fluctuation. In those moments, without someone to guide them, they are prone to rushed and wrong decisions. Goldie and Murray point out that an advisor keeps you on track, shields you from emotional impulses, and helps you keep your investment stable and profitable over time. An independent, fee only financial advisor offers much more than just technical advice. They become a guide who helps to keep your journey safe, stable, and goal focused. Goldie and Murray explain that such advisors assist in designing strategies, balancing risk with return, and setting long term goals that are realistic and attainable. For them, investing isn't simply about placing money somewhere. It's a strategic choice that requires knowledge and wisdom. With an advisor's support, you can develop a solid plan that aligns perfectly with your financial objectives. When beginners start investing, a lack of information and experience can often lead to confusion. In this situation, the advisors provide clarity, offering both technical insights and the emotional support. They prepare you mentally for long term commitment, teaching you how to let your money work patiently for you over time. In fact, stability and discipline are the cornerstone of success in investing. Yet, New investors often struggle to maintain discipline. That's when professional advisors step in to keep your portfolio on track and foster disciplined financial habits. Their guidance helps ensure better returns and long-term security. Chapter 4: The Role of Timing in Investing. Another crucial element in investing is the role of time. Goldie and Murray highlight that many beginners overlook the fact that time is actually their greatest ally. With proper guidance, you not only invest your money wisely, but also allow it to grow steadily over time. A professional advisor teaches you that patience and discipline are essential for sustainable long term benefits. Investments made with these qualities tend to be the most rewarding. Additionally, such advisors craft strategies that match your risk tolerance and personal financial goals. Every investor has different objectives and varying risk capacities. An advisor considers these factors and design a customized plan specifically for you. Ultimately, Goldie and Murray's key message is clear. For new investor starting their journey with the support of an independent, fee-based financial advisor is the smartest move. It helps you navigate market complexities, make sound decisions, and ensure both the safety and growth of your money. Investing isn't just about deploying capital, it's about planning your future security with strategy and foresight. 5. The importance of asset allocation. One of the most vital steps in investing is deciding how your money should be spread across different assets. In the investment answer, Goldie and Murray emphasize that correct asset allocation forms the foundation of your financial future. It's not just about choosing where to invest, it's about ensuring that your portfolio aligns with your risk tolerance and long term goals. The first challenge in investing is balancing with different types of options available. Asset allocation involves dividing all your overall investment into categories such as stocks, bonds, and cash. This balance is crucial because each asset class carries its own unique level of return, risk, and time horizon. Stocks, for example, can generate higher returns over the long run, but their prices are more volatile. Goldie and Murray explain that stocks are suitable for those prepared for long-term investing and who can tolerate risk. Recognizing that volatility is natural helps investor understand that stocks investment can in fact provide growth and stability over many years. In contrast, bonds are relatively safer. They offer stability and a steady income, making them essential for those prioritizing security in their portfolio. Bonds balance the risk associated with the stocks. Cash, on the other hand, represents the safe and liquid portion of a portfolio. It provides flexibility, giving peace of mind and stability during volatile market conditions. Goldie and Murray stress that proper allocation ensures your portfolio matches your personal goals and risk appetite. Without it, your portfolio can become unstable and vulnerable. With it, you gain discipline, balance, and resilience to handle fluctuations calmly. Chapter 6: The Power of Diversification. Diversification Diversification is one of the most crucial strategies in investing, and Goldie and Murray explain that it clearly and practically. The main goal of diversification is to lower risk and stabilize your portfolio by spreading investment across different asset classes, sectors, and regions. When you diversify, you are not just randomly spreading your money, you are protecting it against unexpected shocks. For example, if one sector or asset class suffers losses, gains elsewhere can offset those losses. This balance not only provides financial protection but also peace of mind, which is essential for long-term commitment. Goldie and Murray emphasizes that diversification isn't just about owning a variety of assets. It's also about making sure your portfolio isn't overly dependent on one region, industry, or type of investment. Putting everything into just one or two categories increases your exposure to market ups and downs. Through diversification, you create a safety net. It shields your portfolio from sudden downturns, helps you stay calm during turbulence, and prevents impulsive emotional decisions. Importantly, diversification helps your money grow steadily over the long term because time works better when the risks are balanced. In summary, Goldie and Murray remind us that diversification isn't just a side tactic. It's the core part of smart investing. It protects, balance and enables investors to stay disciplined and patient. Active versus passive investing. Another common question for investors is whether to choose active or passive investing. Goldie and Mary discuss this dilemma honestly and with evidence in the investment answer. Active investing involves investor or fund managers constantly analyzing the market, buying or selling stocks, and trying to beat average return. The idea is to gain higher returns than the market itself. But in reality, most active investors don't outperform the market in the long run. One major reason is cost. Active management comes with research fees, transactions cost, and other expenses that eat into returns over time. On the other hand, passive investing is simpler and less expensive. By putting money into index fund or similar low cost options, investors match market returns instead of trying to beat them. This approach saves times, cuts cost, and reduces emotional interference. Passive investing also naturally offers diversification since index fund spread money across many stocks and sectors. This reduces the risk of relying too heavily on any one company. More importantly, passive strategies foster discipline. Instead of reacting to every small market fluctuation, passive investors hold on for long term, allowing growth to compound steadily. Goldie and Marie's conclusion is clear. For most investors, passive investing is the smarter choice. It offers simplicity, stability, and peace of mind, key ingredients for lasting success. Chapter 8, The Need for Rebalancing. Portfolio rebalancing is another strategy Goldie and Mary strongly recommend. Over time, as markets rise and fall, the portfolios of stocks, bonds, and cash in your portfolio shift. Some investment grows quickly while others stay steady. This change can throw your original balance off and increase your risk without you realizing it. For examples, if stocks suddenly surge, they might make up a larger share of your portfolio than planned. That overexposes you to risk. If a market downturn follows, your losses could be bigger than expected. Rebalancing involves adjusting your portfolio back to its initial allocation. It means selling part of investment that have grown too much and moving funds into areas that haven't performed as well. This discipline keeps your risk profile consistent and promotes stability. Regular rebalancing also stops emotion from controlling your decisions. Instead of chasing rising assets or panicking during a downturn, you follow a logical plan. This keeps your portfolio diversified and resilient. Goldie and Murray noted that rebalancing can be done yearly or more often depending on your goals and timeline. The key is consistency. Done correctly, rebalancing helps ensure your portfolio still fits your current and future needs. Chapter 9, Core Principle for Investors. There are certain fundamental truths in investing that Goldie and Murray emphasize. They explain that the stock market over time has always produced positive returns. This means that patience is your greatest tool. Long term investing harnesses the upward trend of markets. They also highlight the importance of discipline, diversification, and cost control. Without discipline, investors often make rash, emotional decisions that destabilizes portfolios. Diversification protect against volatility, and low-cost options like index fund help preserve more of your return. They caution against stock picking and market timing, calling them speculative and risky. Instead, sound asset allocation combined with long-term commitment lead to genuine success. The author's advice is straightforward. Trust the long-term trend, embrace low-cost and passive strategies, maintain discipline, diversify widely, and keep costs in check. These principles together create not only financial growth but also mental stability and long term security. Chapter 10, Final Lessons and Takeaways. In the investment answer, Goldie and Murray sum up their philosophy by reminding us that investing is not just about making money, it is about building a stable financial future and enjoying peace of mind. We learned that market reward patience over the long run. Passive strategies are generally more beneficial than active ones. Diversification and rebalancing are essential for stability. Discipline and cost control are the silent drivers for success. Most importantly, they stresses that with the right mindset, guidance, and plan, anyone can become a successful long-term investor. By following these timeless principles, you not only grow your money but also create lasting security and freedom for yourself and your loved ones. If you found this audiobook summary meaningful, share in comments which principle resonate most with you. And yes, last but not the least, thank you so much for listening to this audiobook summary on the investment answer. We truly appreciate your time and support here on Listen to Learn channel. If you enjoyed this summary or learned something valuable today, don't forget to like the video, subscribe to the channel so you never miss new summary about finance, wealth and mindset. We would also love to hear from you. Share your thoughts, questions or requests for future book summaries in the comment box below. Thank you.